Welcome to the Friday edition of the Tech Stocks Daily Podcast. Today, we're diving into the whirlwind world of tech as we explore Microsoft's massive options trading buzz and analyst predictions that have everyone on the edge of their seats. We'll also unpack DocuSign's earnings surprise that left Wall Street with its jaw dropped. Plus, we'll unravel SAIC's steady dividend charm and Apple's double whammy as Ted Lasso returns and their strategic financial plays unfold. Whether you're tuning in to catch a ride on the tech stock roller coaster or to get the latest juicy details, today's episode has a little something for every tech enthusiast. Stay with us as we unpack the biggest stories in tech right now. All right, tech enthusiasts, buckle up. Today, we're diving deep into the world of Microsoft, which has been quite the superstar in tech news circles recently. So let's get into it. First up, Microsoft's options trading activity stirred up a lot of chatter. Investors with major money bags have been eyeing Microsoft, showing a mixed bag of bullish and bearish sentiments. According to data from Benzinga's options scanner, a whopping 101 uncommon options trades were spotted. Interestingly, out of those, 71 were calls, with a sheer value of $6,756,486, while 30 were puts valued at about $1,574,994. That's a lot of dollars flying around, indicating that some major players expect significant movement from Microsoft. It's like someone's holding secret party invites, and we're all waiting for a surprise guest to jump out of the cake. Plus, industry analysts have chimed in, setting average target prices around the 462.5 mark. One insightful analyst from Stifel even kept a buy rating on Microsoft with a target price of $475, and D.A. Davidson stepped up their action to a buy with a slightly tempered target price of $450. It's like watching a financial ballet, isn't it? Now, if you're all about comparative analysis, Microsoft's performance against its software industry peers paints quite the promising picture. With a comparatively low price-to-earnings ratio of 30.52, investors might find it appealing if they're on the hunt for growth. Couple that with a reduced price-to-book ratio of 9.3, and Microsoft's stock shows signs of being undervalued. But here's the kicker. A high price-to-sales ratio reveals that investors probably believe they've got a solid gold mine here. Could Microsoft's prowess get any clearer? During an appearance in the podcast universe, Xbox's corporate VP of Gaming AI, Fatima Kardar, reveled in Microsoft's bright future with its planned incorporation of AI into Xbox with Copilot for game assistance. The buzz around what AI could bring to gaming, with features aimed to save time on downloads, offer in-game help, and provide personalized gameplay, has us excited about what's next. It's like Clippy is back, but now with a cooler digital hipster upgrade. While excitement seems unanimous, it's essential to point out that not everyone shares Microsoft's enthusiasm for AI's role in gaming. Some gamers took to the web, venting their detachment about AI seeming less of a helpful addition and more of an unnecessary intrusion. Opinions sure bring the spice, don't they? In short, whether you're watching Microsoft's bold moves in the stock market or eagerly anticipating or dreading the wave of AI meant to enhance your Xbox experience, it's clear that Microsoft isn't staying still. They're in perpetual motion, reshaping tech narratives one option trade and AI innovation at a time. Stay tuned because the Microsoft Magic Show has just begun, and it promises to be a captivating roller coaster. Hey tech enthusiasts, today we're diving into why DocuSign is making waves in the tech world and causing some buzz on Wall Street. Strap in, because the story of today's headline begins with a stock market jump that raised some eyebrows. DocuSign took the limelight with its fiscal fourth quarter results, which were unveiled with some impressive beats. The company managed to not only surpass revenue expectations, but also reported a better-than-expected non-GAAP earnings per share. Specifically, DocuSign's revenues soared to $776.3 million, a 9% increase from last year, beating the general expectation of $761.6 million. Their non-GAAP earnings came in at 86 cents per share instead of the projected 85 cents. You may be thinking these sound like small wins, but in the financial world, every cent counts, and beating expectations is always a good look. Why did this matter so much? Because beating expectations can be a big confidence booster for investors, who reacted by pushing the stock price up by over 15%. However, take a moment before you jump on the next subway to investment success, as some analysts are flashing the caution lights. You see, there's more than meets the eye with DocuSign. While things look bubbly on the non-GAAP earnings front, GAAP earnings tell a more subdued story, resting at just 39, the math equivalent of popping your gum in a quiet classroom when everyone's imagining applause. But it's better than last year's 13 cents in the same quarter, which kinda makes it a victory nonetheless. What's exciting, apart from DocuSign's vaudeville of earnings reports, is their intelligent agreement management platform, which they're using as a growth vehicle, like upgrading from a skateboard to a jet-propelled hoverboard. IM harnesses artificial intelligence to transform the entire lifecycle of agreements, marking DocuSign's foray into a tech arena that's more Aladdin than Jasmine, full of potential for adventure if they get it right. But just as Cinderella had her midnight curfew, DocuSign's fiscal year 2026 guidance still has a cloud overhead. The revenue growth forecast of just 5% isn't exactly music to investors' ears, considering the broader economic uncertainties acting like background villains threatening the peace. Lower gross profit margins also hint that while DocuSign could be accelerating on their tech journey, they might run out of gas or cash faster than anticipated. This means, for now, DocuSign retains its wait-and-see tag. But hey, in a world where anticipation reigns supreme, DocuSign's story isn't just about numbers, it's about strategizing future growth, evolving products, and convincing investors that it can sail smoothly and swiftly, even when seas are rough. So there you have it, DocuSign's quarter of wins living in an uncertain future. Watch this space as DocuSign tries to balance on the tech tightrope, maneuvering midair like a digital trapeze artist. Until next time, stay curious and charged for more tech tales. All right, tech fans, grab your popcorn because Science Applications International Corporation, or SAIC, has been making headline waves today. If you're wondering what's got shareholders and potential investors buzzing, it's all about dividends, earnings, and strategic future plans. First up, let's talk dividends. SAIC's board of directors made a declaration that's music to any investor's ears, a cash dividend of 0.37 cents per share. Pop the date on your calendar. April 25th, 2025 is when this delightful deposit is headed to shareholders' bank accounts, provided they hold shares by April 11th. It's time to ask yourself, is this dividend deliciousness just a quarterly treat or part of the SAIC regular menu? While they hope to continue regularly serving these tasty dividends, it's ultimately up to the board, who'll make a call each quarter based on a frothy mix of earnings, financial standings, and other secret ingredients. What's driving this consistent payout? The company is a tech heavyweight, 24,000 strong, and a proud inhabitant of the Fortune 500 list. With a focus on defense, space, civilian, and intelligence market sectors, they're the cyber ninjas making sure our world doesn't fall apart like a connection during a major Zoom meeting. Okay, payday aside, let's zoom into the numbers screen. The company is all set to serve its fourth quarter financial results fresh from the oven on March 17th. The buzz from analysts? A peppy cheer for quarterly earnings to rise from $1.43 per share to $2.09 per share. That's quite the leap. We're also eyeing a revenue uptick to $1.81 billion compared to last year's $1.74 billion. Hop on your nerd goggles because this is still expected, not guaranteed, although SAIC seems to have its ducks in a row. Did you catch the drift that became a mini surf wave today? A modest dip happened with SAIC stock being down by 0.4%, closing at $104.26. But see it this way, with expected growth and juicy earnings forecasted, that might just be a cryptic reminder for investors to rethink their ready button. For those indulging in speculative salivation, plans for leveraging against these dividends can sound super enticing. Spring $422,670 for $500 per month, or invest $84,555 for days where a peaceful slice of $100 appears in dividends. You choose your adventure, savvy stylers. Looking forward, keep those eyes sharp on SAIC as they launch future forecasts with fluidity and unpredictability cranked by their chosen directors. Remember, while dividends and forecasts float sweet dreams, all things lofty do have caveats marked by risk, uncertainties, and hidden clauses. Say cheers to an exciting market and a chance to trade confidently, or at least buy yourself a slice of digital pie wisdom. Today, folks, we're diving into the world of Apple, which has two juicy stories making waves. Buckle up, because Ted Lasso and some serious financial comparisons are on the menu. First up, let's talk about everyone's favorite mustachioed football coach, Ted Lasso. Apple TV Plus is bringing back this feel-good super hit, and the world is ready to shout, "Let's play ball." The Emmy-winning show, rumored for a fourth season for ages, has finally been officially confirmed by Variety. So, Jason Sudeikis is back, and this time, he's coaching a women's soccer team. I can hear all you Ted Lasso fans squealing with joy. This little tidbit has got the streaming world buzzing, and is a strategic move by Apple to lift its platform further. It could be a golden ticket for Apple TV Plus to draw more subscribers, and even pair it with their avid interest in soccer through Major League Soccer promotions. Next, the business headlines draw us into Apple's financial landscape. They're in the spotlight for their performance in the technology hardware, storage, and peripherals industry. And boy, do we have a mixed bag here. With its mind-boggling price-to-earnings ratio, Apple might just be the best bang for your buck. Or, in comparison to some competitors, maybe not so much. It's like finding a rare Pokemon. Sometimes you think you've struck gold. Other times, it's just a Pidgey pretending to be something cooler. While Apple shows robust profitability and cash flow with eye-popping ROE and EBITDA figures, there's a caution flag up on their slow revenue growth compared to the industry. Their balance sheet also tells a tale of staying quite level-headed when it comes to debt, ranking narrowly mid-tier amongst its peers when we talk debt-to-equity ratios. What's intriguing is how Apple skillfully manages to weave its products, like iPhones, into an intricate ecosystem of other devices and services without crashing and burning like some sci-fi films predict. Plus, with rumors of an ad-supported streaming plan lurking around, things might get even more interesting pretty soon. So, what do you think about Apple's big news day? Are you hyped for more Ted Lasso leaps of faith, or are you delving into their financial strategy like a Wall Street analyst with a caffeine addiction? Or maybe a little bit of both? Let us know your thoughts in the comments below. Do you believe Apple can harness the Ted Lasso love fest for long-term gains? We're all ears for your insights. Because let's face it, Sometimes your opinions are smarter than our AI friends. All right, let's hone in on Microsoft. Given the hoopla in today's arena with those 101 uncommon options trades and the strong analyst endorsements, it seems like there's some juicy potential for upward movement. Here's what I do. Hold. Why hold? Well, although there's bustling action with more calls than Rihanna singing to her fans, it's a mixed sentiment market. A classic example of hold your horses. Analysts are largely optimistic with shiny target prices hovering around $462.5 and $475, which suggests room for growth if you're already on the Microsoft train. Pair that with Microsoft's attractive comparative stock metrics, such as the notably low price-to-earnings ratio. Microsoft looks grounded yet ready for liftoff. The company's fanciful AI endeavors, like the Xbox Copilot featuring smarter gameplay aids, signal fresh innovation that could hit sky high if well received. It's like tending a fire. You see sparks, but you're optimistic a flame could erupt into a roaring storm of stock magic. However, an erring note of caution is the potentially divisive AI initiative in gaming. Some gamers sound less enthralled and view it as mere decoration on their well-baked cakes. Thus, this stock might be batting for a temporary hold, allowing you some time to enjoy your espresso while observing these developments unfold. Remember, stars of the tech sphere often shimmy and shake with a rhythm guided by uncontrollable beats. Make sure to do your own research, pop that kettle for more financial tea, and decide if surfing those tech waves fits your portfolio's groove. Stocks are unpredictable, like a cat on a tightrope, nimble yet surprising, so stay savvy out there. To sum up today's whirlwind market activity, we've seen some standout performances with Microsoft holding exciting potential as curious options trades buzz the floor, while DocuSign impresses with its earnings despite cautious projections from analysts. SAIC surprises with stable dividends amidst anticipated growth, and Apple juggles fan-favorite Ted Lasso with strategic financial plays. If today's tech tales got you excited or left you wanting more, make sure to like, subscribe, and share this video with anyone who loves keeping up with the ever-changing tech landscape. We've got more juicy updates coming your way, so return on Monday for another rundown. Have a fantastic weekend, everyone.